You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time, once again, to gaze deeply, perhaps lovingly, perhaps with consternation, into the world of futures options. My name is Mark Longo from theoptionsinsider.com. It's also, of course, from the ever-compelling network upon which so many of you are binging. Remember, if you're one of our on-demand listeners, we love you. Hey, just keep rating and reviewing wherever you get the show on your platform of choice. It does help all the new folks discover the show. And, of course, if you want to go above and beyond, you want to get pro Q&A sessions with some of the best minds in the business, as well as, of course, options oddities to break down the week's worth of unusual activity, giveaways, live access to this show, every other show that we do, and a whole bunch more. TheOptionsInsider.com/pro is the place to go, or for the cool kids, /secret club. Remember, don't tell anybody about that last one. It's a secret. Let's see who's joining us on the old program today. Holding down the CME Group and FTSE Russell hot seat, our old friend, Mr. Russell Rhoads from the Kelley School of Business, when he's not moonlighting over there at EQ Derivatives, and also putting together a book or two, including the VIX Handbook and Options Strategies for Advisors and Institutions. Mr. Rhoads, a.k.a. the once future and now present Dr. VIX. Welcome back to the program, sir.
I am very happy to be here, and I know we get in all kinds of trouble if we cue music, but you got to cue the school's out for summer for me.
Oh, are you done?
I was done at about 9 o'clock last night.
Oh, well, there you go.
I know. I've been binge watching Meatballs 2.
I forgot
any summer-related movie.
I forgot the nice academic schedule that you live upon now, sir. Even the kids are still in school, but Mr. Rhoads, he's done. He's done for the summer.
You say the nice academic schedule, but This is the first summer that I don't have a PhD hanging over my head.
There you go. Party time.
Yes.
Time in the Rhoads house.
A lot of naps.
A lot of naps. There you go. That sounds more like it as we head right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down all the action to the light side, a.k.a. the upside, and to the dark side this week. Even more appropriate that we use light side and dark side, given that we're coming off the heels of May the 4th out there, the big Star Wars holiday for everyone out there. You excited about Obi-Wan? I guess we shall see. We shall all see collectively if it's going to be interesting out there. It definitely seems like the small screen is where Star Wars is shining these days as opposed to the big screen. But I digress. Mr. Rhoads, you know what we have to do now. Where should we begin our journey in this post-May the 4th show, sir? To the light side or to the dark side?
Oh, let's do light side real quick because dark side looks more interesting.
All right.
So, get the light side out of the way.
Luke and Yoda, get them out of the way. The red sabers are where the action is. That's what you're saying, right?
Yeah. Absolutely.
Right. Let's do it before Lucasfilm listens in and their lawyers call us up. Let's go to the light side first, listeners. As Mr. Rhoads said, it is a more interesting week to the dark side this week. By the way, you guys can see this chart for yourselves over there. If you follow CME Group, they usually tweet it out right before showtime, along with a link to listen to the show live. We do so as well, so you can always get access to it there. Otherwise, if you want to get access to this and all the other data we're talking about here, you got to go to bantix.com. What we talk about on the show is really just kind of scratching the surface. You could spend many days or weeks mining away at these tools over there. Bantix.com, Bantix.com, the place to go to begin that journey, listeners. As we begin our journey to the light side, number 5, our old friend Class 3 Milk. Going out to dairy. Haven't been out there in a little bit. Up 2.71%. And, Class 3 Milk, it does some paper, about 5,400 contracts. So that's not nothing. We could potentially sink our teeth or perhaps have a glass of the old Class 3 Milk out there today. Number 4, RBOB. So heading back out to the energy complex, up 2.82%. It was number 3 in the same direction last week, up almost 5.5% last week. Before you get your knickers in a twist, 727 contracts for RBOB so far this week, so probably not going to be hanging out there. Number 3, the peso USD, so FX. Peso's been popping in there a few times over the past couple of weeks. This week, up 3, almost 3.25%. It was number 5 in the same direction last week, up nearly 2%, 1.97%. And again, before you get excited, there's a whopping 2 contracts on the tape so far this week, so probably not going to be heading out there. Number 2, good old Platinum. This has been a mover and shaker for a while. I may have to amend our top 3 to be maybe a top 4. We might have to throw Platinum in there. This keeps it up. This week, up 7.59%. Again, before you get too excited, 806 contracts on the tape. And then the number 1 mover to the light side this week, you can probably guess. It's one of our 3 frequent offenders. Remember, we're talking Bitcoin, lumber, or nat gas. Those are the 3. And this week, it's nat gas, up 23.37%. I wonder why there's so much green on the nat gas screen. We shall get there as we go now to the dark side. There's a lot of dark, a lot of red on the screen, so much so that the Russell 2000 doesn't even make the bottom 5 this week, and it's off over 3%, 3.12%. So it's been a rough couple of weeks for the Russell 2000. It was number 5 last week, off 6.35%. So closing in on 10% to the dark side. Obviously, a lot of action in the equities. We'll probably get there a little bit later. Number 5, the actual bottom 5 this week, soybean oil, off 4.53%. Remember, it was rocking and rolling last week, up all the way to number 2 to the light side, up 7.78%. So giving a good chunk of that back this week. Number 4, our old friend, the NASDAQ. The E-mini NASDAQ 100, off 4.57%. A lot of bloodletting out there today on the screens post-Fed, especially in the NASDAQ. It's might have lost all of that just today. And number 3, the Ultra 30-year, off 4.79%. Number 2, one of our frequent offenders here, it's Bitcoin. This week coming in number 2, 7.85% to the dark side. Remember, after the Fed rally yesterday, Bitcoin caught a bid, got back up over 40,000, giving a whole bunch of that back now. Looks like coming into showtime, it was back around, 36,300. So quite the drubbing out there in crypto yet again. It was number 7 last week, so outside our bottom 5 as well, off 5.58%. And number 1 with a dark side bullet, a big red saber to the face this week, for heating oil, off nearly 21%, 8% to be precise. It was number one in the other direction last week, up 24.3%. So it's been a lot of living over the course of the past week out there in heating oil. Before you get all excited, 717 contracts on the tape so far this week in heating oil. So we're probably not going to hang out there. But you know what? It's not up to me anyway to choose where we begin. It's up to our guest, Mr. Rhoads. First off, anything surprise you about our movers and shakers this week? Any names popping in there maybe you didn't expect? And then B, where should we begin our journey this week, sir?
Well, I as preparation, I got up super early this morning and flew home from school and listened to last week's program. And I just love, heating oil at the top last week and heating oil at the bottom this week.
It giveth and it taketh away, sir.
I know, just like that. And I don't think a lot of people are aware of this, but in the energy contracts, heating oil correlates with jet fuel prices better than anything else. And when I heard that this morning, and of course I was on a jet when I heard that this morning, I was like, maybe heating oil's rallying up not because people are cold, but maybe because people are thinking that jet fuel prices are going to continue to move higher. It sounds like a really weird disconnect, but that actually is something that happens that a lot of people aren't aware of. The other one that's kind of funny is you brought up the NASDAQ. I wrote something up over the weekend about NASDAQ and about how the last 4 weeks on a regular week-over-week basis, that was the fourth week in a row last week that we dropped more than 3%. And the NASDAQ has never lost value on a week after we've had 4 consecutive 3+ weekly drops. Right now, on a week-over-week basis, it's down 25 points. If you compare it to last Friday, as opposed to last Thursday, because last Friday was a pretty interesting day in its own right.
It's all about frame of reference, is it not, sir?
It is. And that's why I wanted to finish with the dark side, because I found NASDAQ down there kind of funny. Because if this were during the same time as the Volatility show, it'd be right there in the middle.
Yeah, you're right.
All about your starting point.
It is. And yeah, you don't see the equities breaking into the dark side or the light side too often. It takes a lot for them to move that much to compete with some of these smaller commodities out there. Yet they're doing it this week. Where should we begin our journey this week, sir? We have nat gas blowing the doors off. We have equities getting annihilated. We have the Fed out there this week. What's lighting up your tape? Where should we begin, sir?
Let's do equities, and we'll definitely do energy shortly thereafter.
Equities. I think we can make that happen.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the equities section. You guys know where to go to find all of these reports. You can try them out for yourselves. CMEgroup.com/TWIFO or /TWI. Remember, there's no charge for those. Those are all kind of the trial versions. If you want to kick the tires and upgrade, head on over to bandtix.com. Once you've gotten a taste of it, I think you're going to want a little bit more out there. And of course, like we mentioned, things are melting down, so we're probably going to maybe dip our toes out there in the old NASDAQ, the E-mini NASDAQ 100 first. So go to that drop down, listeners. Go to asset class. Go down from ags to crypto to energy to equity indexes and head on over to U.S. indexes. And then we're going to go to the NASDAQ first. Of course, before we do that, let me set some tables here from a vol perspective. Can't really talk equities without talking the flip side of that coin, which is volatility. And mostly a lot of green on the vol screen this week, listener, which is saying a lot because we were pretty frothy this time last week and getting a little bit more juice in the vol screen this week. RVX, so the VIX of the Russell 2000 coming into Showtime, listeners, was a little bit over 35.5. So remember, we were talking for a while. It was hanging out in the mid to high 20s. For quite some time. You kept saying, will it get north of 30? Can it get north of 30? Well, the answer is yes this week, and pretty resoundingly so, up about 1 3/4 points. So it's been north of 30 now and managing to hold on to it for a couple of weeks. Speaking of north of 30, VIX also north of 30. When we kicked off the show, it was right around 31.25. It puts it up about 2 3/4 points from where it was at this time last week. So it looks like we're back hanging out, listeners, in that very frothy, very turbulent, certainly north of 25 and maybe even north of 30 for a while out here in VIX land. VVIX, so the vol hanging out right around a 120, close to about a 118 when we kicked off the show, up about 2.5 points. And vol Q, a.k.a. the at-the-money vol of the NASDAQ, looking almost identical to RVX, almost 35.5 there as well, up about a little over 4, about 4.2 points from this time last week. It puts that VIX to RVX spread at about 4.3 points. That's almost a full point tighter, and the VIX to Vol Q at about 4.25. That's about 1.5 points wider. We don't do a Vol Q to RVX, but that would be almost unched, 1/10 of a point, which is weird. I don't have a lot of historical basis for that small cap to NASDAQ vol spread, but perhaps we should investigate it more. Once and future and now present Dr. VIX, as you mentioned, there's a lot of vol in the equity world out there. What do you make of all this madness we've seen this week, the rally post-Fed, now the sell-off, and everything else we've been seeing for the last few weeks, sir?
Well, if I remember correctly, and I was half asleep because I was on a really early flight, but if I remember correctly, I think last week VIX was right in line with Vol Q, and now Vol Q has widened that one out to a certain point. And when I see VIX in line or at a premium relative to RVX or Vol Q, I often think that there's more macro global concerns when it's RVX and Vol Q that are a big premium relative to VIX like we've got right now, and we're at elevated levels. You got to take that as more of a direct U.S. market concern versus a global equity market concern. And I feel like today's sell-off, which I haven't heard a good explanation for, if I were a business reporter and I had to make something up, I have to have a reason of why we sold off on a day like today. I might say that global investors are more concerned about U.S. stocks after the language from the Fed, maybe more so than U.S. investors were yesterday. So everybody woke up and said, this does really, I don't know what they're thinking over there in the U.S., but what we see, it doesn't look good for stocks, at least for the next 3 to 6 months or so.
Were you surprised by the aggressive rally we saw on the heels of the Fed yesterday? It sounds like you're equally surprised by the sell-off.
No, I truly was, but you continue to, and I've been in the process of doing some outreaches and talking to a lot of institutional investors, and there still continues to be a concern around liquidity in both directions. And my assumption is the big old rally that we got yesterday afternoon, some of that, and possibly the dip that we're looking at right now, both of them probably can be attributed, at least partially, to a lack of liquidity on.
You were saying
You're
saying it was due to a lack of liquidity, and then we lost you, sir.
Oh gosh, I was just saying it was a lack of liquidity in both directions. Tell
you what, we'll keep rolling with the show, listeners, in the equities, and we'll see if we can get Mr. Rhoads back on here. Let's go on out now, since we were talking about all things NASDAQ, and NASDAQ is really just getting annihilated out there today, listeners. Let's hang out there. We don't get a chance to break down the E-mini NASDAQ too often here on the show. And yeah, coming into showtime, we're seeing the NASDAQ down at 12,805 off 46 handles, or about 1/3% out there. That's just on the week, obviously. We've seen a lot of upside and downside out there on the week. So yeah, seeing about 203,000 contracts on the tape in E-mini NASDAQ this week, listeners. And of that, unlike a lot of equities where all the papers going out, of course, in a day or two, this week we're looking at about 35% of that 200,000 contracts coming in the May end of month contract. That's interesting. Don't see that too often. That's about 26 days to go out there. So intriguing stuff. Again, don't usually see that too often out here. Now let's look and see what we're seeing out here from an overall vol perspective, listeners, as we attempt to get Mr. Rhoads back. All right, Mr. Rhoads, third time is the charm. Can you hear me, sir?
Yeah, I can hear you perfectly fine now on my telephone.
There we go. The magic.
I'm throwing a laptop through the wall after we're done today.
The magic of telephone.
So,
all this advanced technology, sir.
Yes, talking to you across the copper wire now. There's even a dial on this phone, but it's working better than the. If I start complaining about Microsoft Surface, do you think maybe they'll send me a new one? I
think that's how that works. Yes.
Do we have that much of a reach?
We have some pull. We have some pull at Microsoft.
I was just saying the big whipsaws in the equity world. I think a good portion of it is a lack of market participants. That's all. I'm going to sum it up quickly before I fall off again.
Before you get kicked off, as we head on into, I was just pointing out in your absence, Mr. Rhoads, that we are seeing some interesting paper out here in NASDAQ, 203,000 contract, which is decent paper for the E-mini NASDAQ. And unlike every other equity we ever talk about on this show, it's not all going out tomorrow. It's actually end of month May, which is kind of weird. About 35% of the paper is end of month May. I know you spend a lot of time when you're not talking to me crunching and analyzing NASDAQ. Does that sound along the lines of what you've seen, a little bit relatively, dare I say it, long-term paper for equity in the NASDAQ, sir?
I would say for the average trading that I see in the options and the options on the NASDAQ index and the options on the NASDAQ futures, yes, because you really do see, I know a big portion of option trading period is in, the next couple of weeks of expirations. But when you get into the index markets, it tends to spread out a little bit more. Like in the S&Ps, it spreads out, there are a lot more farther dated trades. Typically, I think the NASDAQ and the Russell, for that matter, are a bit more trading oriented. So most of the paper is in near dated. But so, yeah, I do find that kind of interesting that people are looking farther out into May right now with the paper. Maybe they think we're going to rebound, but they don't think it's going to happen between now and tomorrow. Something like that.
Yeah, well, it looks like it is upside. 13,500 calls are leading the dance this week, listeners, with about 18,000 contracts on the tape out there in May. Looks like pretty much all of that on Monday. 17,700 going up on Monday, and pretty much nothing else trading the rest of the week. So, yeah, 13,500 calls in May. Listen, by the way, if you're wondering what is the vol out there in that May contract, it's about a 32. So, pretty frothy. It's actually down a little bit from what it was this time last week, which is kind of interesting given just how much action we've seen out there in the NASDAQ just even today and over the course of the last 24 hours. In terms of skew, last week the puts 13% bid, this week 14.8% bid, and the calls 10.8% cheap. This week 16.7% cheap. So no love for those calls, so maybe they were blasting away at those 13,500 calls out here. Let's see what else was trading really quickly, listeners. We've got, what else was even close to those calls? Those calls were definitely leading the dance out here this week. Seems like Monday was a pretty hot day. We also saw 11,000 of the 13,000s going up that same day, so maybe a bit of a ratio risk reversal. Both of these were opening, though, I should mention. The 13,500s and the 13,000s both opening. Saw the 14,000 calls also trading 13,000 times on Monday. Those were closing, so maybe rolling from the 14,000s down to the 13,500, 1,300 vertical. I don't know. Either way, it's kind of weird paper, but a ton of paper. 13,400 of the 14,000s, 13,800 of the 13,000s, and 18,000 of the 13,500s, all going up end of May contract. Pretty much 99% of that going up on Monday. So an intriguing paper. Before we roll out of equities and get into some other complexes, believe it or not, there are other complexes to talk about, listeners. Let's go on out to the Russell 2000 really quickly. Again, go to that drop down, go from the NASDAQ, drop down a couple into Russell 2000. Kind of a quieter week, at least from an overall volume perspective. Only a little over 20,000 contracts on the tape in RUT this week. So that's kind of interesting given how much movement we are seeing out there. Again, Russell 2000 just outside of our bottom five this week at number 8, off 3.12% since our last show. Again, this week is kind of almost unched. It's down about 0.25%. So, again, we've seen huge rallies yesterday, huge sell-offs today, kind of wiping each other out. And of that paper we're seeing out there, again, looks like it's the week 3 May contract with 15 days to go. That's where the action is, about 27% of the paper. The vol out here, 34.25, also down from over the course of this week, which is kind of interesting. And then we've seen a lot of action over the course of this week, which makes that kind of interesting. The puts last week about 12% bid, and they haven't really changed. The calls last week, 10.5% cheap. This week, about 13% cheap. And the big dog out here this week is seeing 1,900 calls. So those proverbial small delta calls going out tomorrow, those were trading about 500 times, as well as the 1860 puts in May, 331 of those. Oh, I take it back. 2110 calls in June. 600 of those going up this week. So those are certainly smaller delta now as well, which is kind of interesting. Mr. Rhoads, anything catching your eye in the small caps before we head on out to energy, sir?
No, nothing specific. Not as much as within the NASDAQ complex. Nothing startling. One thing while we're on the equities real quick, you had the with Dan Graham a few months ago, and he said something that I never really noticed that really has shown itself to be true for most of this year. He talked about if you have a big trend on Fridays, it seems to follow through until about midday on Monday, and you can wait till about midday on Monday for some of your reversals. This past, we had a really weak Friday last week, and then NASDAQ just kind of floundered around in the morning on Monday, and then took off to the upside. So, and because we've had such strong moves toward the end of the week, you're seeing that pattern play itself out over and over again. So, I'm getting up there, but you're never too old to learn some new stuff, and I picked that up from your show.
Yeah, Mr. Gramza, he throws out some nuggets every now and then. That certainly was an interesting one. And also some nuggets to be learned out there in the land of energy. So let's head out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Back to one of our frequent offenders, back to nat gas. You know where to find this. Go into that drop down again. Go out of equities, pop it up one to energy, then slide on over to the product family. You're going to go nat gas, and right to the top of the list there, you'll see the first nat gas product there, doing 422,000 contracts this week. So a pretty robust week. Coming into the show at about 8 3/4 out there in that front future, up about 1.5 points or 20.65%. So again, a big pop this week out there in nat gas. I wonder why. Mr. Rhoads, sir, I know when you're not watching equities, you've been paying a lot more attention to nat gas and the energy complex for understandable reasons. What's catching your eye out there in the land of nat gas these days, sir?
Well, I did. I assumed it would be on the list this week when I saw that not only are they having supply issues over in Europe, but apparently the people that own the nat gas are hanging on to the nat gas. They're saving it for a better day. So the suppliers are fronting the storage costs because they think that the price is going to continue higher. And, they have very liberal insider trading rules with respect to trading commodities. And that's just because the producers that know a lot more than the producers and the suppliers, et cetera, who know a lot more about the fundamentals than we do, so that they can go about hedging themselves. And when I hear that, there are firms in Germany that are hanging on to their LNG and going to store it because they don't expect the price to come down anytime soon, that's not something I want to take the other side of.
That is true. I was surprised to hear this week that despite of obviously all the hostilities between Russia and Ukraine, there is a little bit of a détente on the nat gas side because there are pipelines. About a third of Russia's nat gas flows to Europe through Ukraine, and they're still allowing them to sell that, unmolested right now. So that's kind of interesting to see. There is a bit of a nat gas détente going on. They haven't attacked the pipelines or anything like that yet, which is kind of interesting. If they were to do that, that would certainly be another argument, another arrow in the upside quiver, which doesn't seem to need much help right now. Like we said, a lot of paper on the tape, over 400,000 contracts, 425,000 right now. And of that, exactly 25% coming in this front June contract that has about 20 days to go out here. And 8 3/4 is where we're hanging out, listeners. And in terms of vol, nat gas can get frothy. It can get juicy. It can get into the triple digits. And it's flirting with that again. It's at about an 86.5 right now, up about 12 3/4 points this week. So vol getting juicy again. As you see a lot of these commodities, the bid is to the upside, so we keep moving upside. Unlike an equity, listeners, the vol gets frothier, gets juicier, and so we're seeing that play out again this week. Speaking of skew, last week the puts 3.2% cheap. This week, no change to the puts, 3.2% cheap again this week. It's the calls that have gotten a little bit more bid, 5.7% rich. Last week, 6.5% bid. Remember, that means there's a 6.5% premium to the already rich 86.5 at the money vol if you want to buy that 25 delta call, listeners. So intriguing stuff out there. And in terms of action, what was leading the dance out here this week? It seems like it's a battle on the 10 strike and pretty much pick your month, Mr. Rhoads. 10 calls are active across the board. They're very active. There's a couple of hundred contracts difference, both doing over 10,000 contracts in June and in July. I guess we'll go to July first because it is slightly the winner chicken dinner right now, doing 10,252 contracts, 3,700 yesterday, almost 3,000 today, 1,900 on Tuesday, 1,600 on Monday. Kind of back and forth all week, closing earlier in the week, opening later in the week. We don't have the OI change for today's paper, but a lot of action on the 10 strike today, which again is indicative. And we start seeing these we were talking about a while ago when we saw the 7 strike active throughout most of the year. That was maybe indicative we were looking at higher markets. Now we're back to the action on the 10 strike because the 10 calls also active in June, listeners. 10,073 going up there this week. The big day once again today, 4,080 on the tape today, 2,900 on Tuesday, 2,300 on Wednesday, a little bit less than 1,000 on Monday. It's like mostly opening throughout the week, but it seemed like a lot of back and forth trading actually. So yeah, action on the 10 calls, and not to be outdone, the 10 calls also active in August to the tune of 9,000 this week. So pretty much 10 calls are the name of the game this week in Nat Gas, listeners. 4,100 of the 10 calls trading today in August, 2,000 on Tuesday, 1,200 on Wednesday, 1,600 on Monday. Kind of back and forth opening and closing out there. But yeah, 10 calls. Wow, that's the strike. Also 10 calls active out here in October. Pick a month. Jan of next year, 10 calls. Pick a month. You got 10 calls active across the board. I suppose that shouldn't be too surprising, Mr. Rhoads, given the fact that we are seeing a lot more upside, even though we're only at 8 3/4. Does that give you any pause, sir, that we're seeing so much action right now on the 10 strike? Because usually where we see action, we're usually headed there sometime in the near future.
I find it really interesting. Something else, if you go one column over with those put call ratios, I love and I'm well aware that put activity can be bullish and call activity can be bearish, but I love how you've got a really low put call ratio in July and August, and then in September it completely flips over, where you've got September, November, and December. All the way out to December, all those months, it's well above 1. And then it flips back over in the wintertime. You would think it would be opposite with natural gas, where, during the summer season, maybe we'd get a softening of the price. And then when everybody's cold, we'd get people would be worried about the bump in price. And then you overlooked, you worked your way into January of 2023, but have you ever seen the 12 strike calls, the most active in any month?
I was just going to say that. The 12s.
February. Yeah.
The 12s make it on the list. 1,300 of the 12 calls going up in February of next year, listeners. 500 on Monday, 100 yesterday, 685 today. So, yeah, I was going to save that for last, the cherry on top, sir. But, yeah, yes, you're right. That's maybe a little bit concerning that we're not going to see a mitigation of this madness in the nat gas space anytime soon. And of course, if hostilities continue, if Ukraine decides to shut off that flow of nat gas through Ukraine from Russia, that could certainly lead to a 12 strike perhaps in the near future as well. So yeah, just crazy stuff afoot out here. We could probably spend the rest of the show talking just about nat gas. There's enough to parse out here. But Mr. Rhoads, where should we hang out next? Should we do more energy? Should we go to another complex? What is lighting up your tape this week, sir?
I'm gonna let you choose the next place you would like to go. A little bit of me wants to look at oil, but I think we beat oil to death on here. So,
all right,
it's oil or dealer's choice. How's that?
It is a Fed week. I know a lot of our listeners love themselves some rates. Yeah. They want rates pretty much every week. So let's indulge them this week. A little bit of the old rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the very controversial world of rates. You know where to go to find this. Pop on at Energy, go down 1, 2, 3 asset classes, listeners, to interest rates, and we're going to hang out in U.S. rates. I will allow Mr. Rhoads to pick what we actually break down the show. But before we even get there, Mr. Rhoads, you talked about the lack of liquidity coming out of the Fed announcement. What did you think about the Fed announcement in general and their approach to trying to tackle this conundrum that is somewhat of their own making, sir?
I feel like in the long run, they're finally, it's finally, I think they're accepting reality. The way that they've hinted around that they're not going to pay a whole ton of attention to the stock market. They've never said that they do pay attention to the stock market, but the fact that they're getting back to their purpose in life, which is only supposed to be 2 things, trying to get good employment or as strong employment numbers as we can get, and also making sure we don't have too much inflation. Just the fact that they seem to not worry as much about asset prices and focus more on their real purpose. I felt like that's why we got the rally yesterday. Even though, ignoring equities shouldn't be too good for equities, but the fact that they're maybe going to, for the long run, do the right things. That was my justification for yesterday's rally. Now, you got a cool theme going in your head, and then you take a look at the quote screen and you see all the red that you've seen today, and you're like, well, maybe that theory wasn't 100% correct. So, but that was my takeaway yesterday. Even before we got the huge rally, what I really felt like was, and I'm wrong, so more power to me for saying that I thought this and I was completely wrong. I felt like after yesterday that maybe we would have some more confidence in the Fed, and that confidence would translate to maybe the bottom was in for equities. That's really how I felt about it. Now, doesn't look really smart right now.
A lot of people have been wringing their hands of late because they obviously look to fixed income as a bit of a diversification tool away from equities. These two asset classes kind of been moving in lockstep for the better part of the last month or so. What are your thoughts on that, Mr. Rhoads, and the fact that so many people are starting to take umbrage at their strong correlation, sir?
Well, that typically happens when there are concerns about the financial markets across the board. One of those CFA things, they teach you all about diversification, and then when you get to level 2 and level 3, you start to have to, you learn the facts in level 1, and then you have to discuss these things in the higher levels. And in the higher level material, it's like, diversification is great, but often when you need it most, it doesn't work particularly well. And we've kind of needed it this year, and it hasn't worked particularly well. And I do start to wonder if it may be a good time, and people start throwing eggs at me and stuff when I say this. It might not be the worst time to think about dipping your toe into the bond market. I know the Fed's going to continue to raise rates, but is that going to work its way to higher rates farther out on the curve, or are we just going to invert? And that's so. I think there'll be a lot of surprised people if we get a couple more half point hikes, and the owning something like the TLT or the HYG, and I know this is a future show, but something like that is actually not doing so bad. So the near term moves by the Fed at this point may not translate into the same sort of impact farther out on the curve. And I might even be willing to take a look at getting long the 10-year or the 30-year futures as well.
Let's take a look at the said 10-year right now. Listeners, get on over to that rates complex. Like I said, go into the U.S. rates and scroll on down to the 10-year. It's right there in the middle of that list. If you're wondering how much paper going up in the 10-year this week, listeners, a whopping 2.2 million. So not a lot, not a heck of a lot at all. No, obviously, it's a very busy, very active product out there, listeners. We're at about a 118.03 in that front future out there in the 10-year. If you don't follow the 10-year day-to-day, listeners, and unlike an equity, which pretty much all the paper would be going out in that contract going out tomorrow, and it's a decent amount, 27%, but we've got 52.5% going out in the June contract. That has a whopping 15 days to go. So we'll head out there. A lot of near-dated paper hanging out right now in the 10-year, which I know is counterintuitive for a lot of people. It's a 10-year, but you're talking about near-dated paper. Yet that's where we hang our hat this week, listeners, to the June contract. If you're wondering what is the vol this week in the 10-year, remember, of course, Fed Day, kind of like an earnings event for the fixed income markets. They could build up some juice, then it kind of comes out. And we're seeing a little bit of that happening right now. Already not a huge amount of vol to begin with, so anything coming out is of note. And we're seeing about almost 3/4 of a point coming out this week, which, again, when you're starting at about a 780, is a heck of a lot out there. That's where we're hanging out right now, about a 783 in the June vol in the 10-year. In terms of skew, again, you're not going to see any real pronounced skew out here in the 10-year. Usually, when things start getting crazy in the skew, something's afoot. Last week, the puts 1.2% bid. This week, about a point, so not a huge evolution there. Last week, the calls 1.1% cheap. This week, coming in a bit, 3.4% cheap. So that is something of note for in terms of skew evolution. And in terms of action, what was leading the dance out here this week? If you said the 118 even puts, which makes sense, that's pretty much where we're hanging out. That's the at-the-money strike right now, doing a whopping 101,405 contracts. So that one put doing almost half as much paper as the entire NASDAQ 100 out there this week. Again, it's pretty much active almost every day, ironically, except for Tuesday. People keeping their powder dry on Tuesday. It did pretty much almost exactly 30,000 contracts every day, except for Tuesday when it did 12,000. So a pretty active contract. And then right behind it, we have the 117.5 puts, so about $0.50 out of the money puts. These doing about 97,000 contracts. Again, pretty active pretty much every day this week, except for Monday, 14,000 on Monday. So interesting to see the little bit of disparity of paper on those days. We also have the 117 puts, so a nice little put strip there at number 3 with 76,500. The big day for those was Wednesday, 34,000, and then 18,000 today, and then 13,000 Tuesday, 10,000 on Monday. So intriguing stuff. It definitely was pretty much all June, all the time this week in terms of paper. We fall down quite a bit to get the first big contract in going out tomorrow. That is the 119 3/4 call, doing 63,400 contracts. So about half what we're seeing in the other contracts. So a lot of paper out here. Mr. Rhoads, anything surprising you out here in the 10-year? And we got a little bit of time here left in the show. Where should we hang our hat after the rates, sir?
Oh, well, first off, that 118 price point, I just can never recall a single contract like that dominating the volume so much. It was such an outlier like that, especially in a market like rates where you've got so many different alternatives to. Nat gas is one thing. You don't have a whole lot of different alternatives to trade, but within the rates contract, you have so many different ways that you can go about getting exposure to interest rates that you would think the volume would be spread out a little bit more, I guess is what I'm in a very inarticulate way trying to say. But I guess, Mr. Valentine has definitely set the price on the 10-year in June, and that would be 118. Maybe which is right about where we are right now. So maybe it's time to buy.
About exactly where we're hanging out right now, pretty much 118, sir. Yeah. Before we get some of you listeners to squeeze in one more complex, I think we're going to sneak out into the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, going to do a bit of a weird one here to end the show because it's kind of fun, and it popped onto our movers and shakers this week. For the first time in quite some time, this is our old friend Class 3 milk. So yes, we're going to find that out there in the ags. Listeners, going out to the ags, and then instead of grains and oil seeds or corn, where we usually hang out, or wheat, or any of the other things we usually talk about, even livestock, we're going to go below all those to dairy. And then right to the top of that list is Class 3 milk. Again, this is not a 10-year. It's not doing 2.2 million contracts. It's doing a whopping 5,300. But for Class 3 milk, that's actually a fair amount of paper out there. If you're wondering, where is Class 3 milk trading right now? It's at a whopping 26.91 in that front future. I'm sorry, 24.90 listeners in that front future. Right around the 25 strike here in Class 3 milk. Of that, over about 5,500 contracts, the lion's share going up in July. It has about 88 days to go. It got some meat on that bone. 17% of that paper. So kind of a spread out paper here in Class 3 milk as well, which is kind of interesting. If you're wondering, what is dairy vol these days? It's at about a 23 1/3. That's up about half a point this week. And in terms of skew, we are seeing the puts last week were 1% bid. This week, about 3%. So catching a bid on the puts. The calls last week, 4.3% rich. This week, man, they came for the calls. They are unched to the at the money pretty much. So they annihilated the calls, bidding up the puts. That's kind of interesting given the fact that we are popping this week out here in Class 3 milk. So what are they up to out here? Let's see. Let's go out to, looks like the 21 puts were leading the dance in just about every month. About 300, whopping 300 going up in July, about almost 300. And they were active pretty much all week long, opening all week long as well. The big day was Tuesday, nearly 200 of them there. So it looks like that's where that put bid's coming from. The 21 puts also active here in August, about almost 300 of those as well. Same day, Tuesday. 194 going up there as well. So maybe it looks like maybe a bit of a roll. Let's go back and look really quick. Yes, Tuesday, 194. So it looks like maybe they're opening both days, though. So we're just opening maybe a bit of a calendar. 194 each day on the 21 puts, both in July and August here. And also 21 puts active in September. Let's see. Let's go. How much you want to bet? Yep, 194 in September as well. So maybe they bought the 21 put calendar strip out there 194 times in each one of those months. So that's where a lot of this paper is coming from. 21 puts. That's, you're talking, several handles out of the money. So intriguing stuff. The fact that most of these put wings are getting bid does indicate they're probably buying these. So some folks coming in, Mr. Rhoads, and scooping 21 puts in Class 3 milk. I bet you didn't think you'd be talking about that today, sir.
I did not, and I'm just going to say, if this is a guy out of the Bumble, middle of nowhere, A.G. Edwards' office in Wisconsin, I'm going to give it some credence because they would know stuff. The thing with milk, just from a macro standpoint, do you or your much better half do the shopping for your household?
We kind of mix it up, a little bit of both.
Oh, okay. Well, if I haven't been in a grocery store since 2013. But my understanding is the price of milk keeps going up. That's the one that's in the shopper for the household space, whereas we see the gas prices all the time. I drive back and forth to Indiana pretty frequently. So we make fun of milk, but I think at a ground level type of getting a handle on inflation and what essentials are costing people, it is a good market to pay attention to.
Being lactose intolerant myself, my grasp of the dairy prices is not that high, but I know I can see in like the oat and non-dairy milk space, they certainly have been going up. So yes, I can reasonably intuit that dairy prices probably going up as well. But let's see what you got in store for us this week. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback, where you guys send in your questions, your comments, you vote in our polls, all sorts of fun stuff. Let's go on out first now to this one. Looks like a product request here from Aries Musa. Well-timed product request because he or she, by the way, I like your Scrooge McDuck icon, Aries. I like that. That's cool. They say they're patiently awaiting micro crude oil options, and they have a hands-folded praying emoji there. Well, you have good timing, Aries, because CME announcing just this week they're going to launch options on their micro WTI crude oil futures on June 6th, so D-Day. Of course, pending regulatory approval. CME excited. They're saying they're close to 20 million contracts having traded since launch on the micro futures, and they're saying, so with that, they're pretty excited that the options are coming soon. Mr. Rhoads, are you as excited as Scrooge McDuck is here that we're getting micro crude oil options soon, sir?
I actually am. And I believe you guys were talking about this last week as well. And I like the micro futures. I've been trading around those an awful lot ever since they made them available to us. I know one of the smartest energy people I know. She does a lot more scaling by using the micros than the big contracts than she used to do, and she does trade size. So my expectation is you will see instant liquidity in this product. And just as a quick segue, as a as an exchange veteran, where I got to see how the sausage was made for a few years, if you have things that you want the exchanges to create, what Scrooge McDuck / Aries Musa did here, tweeting it out, they hear that stuff. They really do. And if you say, I think you guys ought to do this, they'll turn to some of the brokers that feed a lot of their volume and say, you guys think your customers would trade this? But a lot of the ideas for new things come from you guys. Why don't you do a smaller this? Why don't you do, some of them fail. I feel like we did 10 lot options a long time back for really high price stocks. That came from individuals asking for them. They kind of died on the vine, but the product came out there. So the exchanges do hear you guys, and they want to create things that they think people will trade. And professionals like markets that retail are interested in as well, because it increases the liquidity. So make your voices heard through the free speech of Twitter.
Of course, Scrooge McDuck, he swings a pretty big stick. When he's not busy swimming in his money bin, he's got some money at this. If he wants micro options, CME's going to launch them. He's got some pull, that Scrooge McDuck.
Yeah, he does. I have not tried yet, but at some point I will try to dive into a big pool full of gold coins, and I'm sure it'll go very well.
Yeah, let me know how that works out for you. I'm curious if you survive the ordeal, how it goes for you. Let's go out to our questions of the week here. We asked you last week, what are you guys thinking with the S in the red pretty aggressively last week, and obviously still doing that this week. We gave you 4 choices of how you're positioning in your broad market right now. You're still long S&P 500. You're just kind of riding this out. Or you're long S&P but with a put or some other hedge. Or you're in cash waiting to do a little BTFD in. Or you're into or moving to crypto. And nearly 36%, 35.8% of you chose in cash waiting to BTFD. So, yeah, let us know what your levels are for BTFD. And still long the S, or so still long SPY or SPX, whatever you're trading out there, E-minis. About 33%, 25% saying you're long the S still, but with the put or some other hedge. Only 6% saying you're into or moving to crypto. And then this week, we've got one for you out there. We're asking you, with the Fed, Ukraine, and inflation conspiring to keep options volume high this year, but the options market, the U.S. listed options market, not futures option listeners, traded nearly 10 billion contracts. Can we possibly beat that total in 2022, or is that too much volume? So, Mr. Rhoads, first off, what are your thoughts on a lot of our audience, over a third, saying they're in cash, at least they were this time last week, looking to start buying some dips? And then also, what are your thoughts on overall options volume for this year? Yay or nay on 10 billion, sir?
First off, the cash thing, I am totally in that boat. And to deviate a little, probably more than I should, but what the heck. So the way that I've always handled my retirement account is I go cash, and then when we get a sell-off, I'll buy into some stock funds, then cash. I've been doing that for about 20 years. Back in November, I went to all cash for the first time in forever. Part of the reason is I'm closer to retirement, so my risk tolerance is lower. But I'm in the same boat right now. I have a number in mind where I want to get back into the stock market. And I keep having to sit on my hands and stop myself. I'm thinking in the 3,800 to 3,900 for the S&P 500. That might be a good poll question for you. If you are in cash, where would you like to see S&P 500 before you start buying stocks?
Along those lines, Mr. Rhoads, before you even give me your answer on the 10 billion, we have something along those lines, because as we were digging up some info for this, we stumbled across a poll we did. Might be a little scary, so be prepared. A poll we did back on March 24th of 2020. You recall that heady week, sir? A pretty crazy week out there. March 24th of 2020. It was a very similar, at least when we posted it, which we found it was yesterday. Yesterday, of course, we were in rally mode on the heels of the Fed. And when we posted this poll back in 2020, we were rallying 8% in the S&P market on the heels of Fed, quote, stimulus fever. And we were racing past the, get this, 2,400 level in the S&P. And we asked you folks, was this a rally? Did this have some legs, or was it the mother of all dead cat bounces? Where would we be at the end of that week? Would we even be above 2,400? And 73% of you were fading the 2,400 levels. Mr. Rhoads, does that give you any pause or perhaps trepidation when you're looking at levels to buy back in? They were fading 2,400 not too long ago, sir.
That's why I'm kind of not stepping up quite yet. I'm afraid I'm too early. It's about price and timing. And I do think that the equity market is closer to the lows than the high. I think the low that we're going to put in on this move is closer than, the most recent high in the S&P 500 from a few months ago. But I do think we've got farther to go on the downside.
Yes, that is the perennial question. You're right, that might not be a bad poll question for next week. If you are looking to BTFD, what is your level? Where are you looking to buy in? Where are you comfortable putting on some equity risk right now? Is it that level everyone's talking about, 3,700 if we break through 4,000? Is it somewhere around there? Is it this mythical 2,400 level that wasn't too mythical not that long ago? Or all sorts of other fun stuff. I mean, this is a topic I'm sure we'll be discussing for quite some time. Unfortunately, that music means we've run out of time on this episode. But before we go, Mr. Rhoads, if folks want to check out any of your books or your research, I think you've been doing some videos of late as well. Where should they go? What should they do?
Just eqderivatives.com. Anything that I write goes in front of the paywall. I've gotten myself back up to doing a Saturday weekly recap and plus a preview if I think something interesting might be coming up in the following week. I had a long call on the NASDAQ 100 this past weekend, which was really smart until today. But I think I had pretty good justification behind it as well. So EQ Derivatives, anything I do like right now, you definitely see me talking about it on Twitter or retweeting the other things that people are saying about me on Twitter as well. And on option volume, we didn't really get to it. I do think we may have record option volume again this year.
Oh yes, we got sidetracked by the 2,400 as you want to.
No, I don't think the volatility is going anywhere. So I think that's why I do. And beyond that, you're seeing more expirations. I know they added them on the futures on options for the S&P 500, but they're doing the same thing for the index options, and those are doing pretty good volume. So I think the short-term option trading and the increased opportunities is going to result in maybe our 10 billion contract year.
Mr. Rhoads, I might have a surprise for you as we're wrapping up the show. I just found out, my producer just informed me that I will be on a plane back from OIC during our normal show time next week, so I will be unable to record the live TWIFO. So since you are on academic hiatus, you think you can handle the big cheer for an episode? Maybe I'll get you a fun guest.
Yeah.
Maybe we'll get you like Mr. Gramza or somebody.
I've always wanted to be your Joan Rivers.
Well, you got the chain smoking the gravelly voice down. All you're missing is that.
This is an honor. This is an honor. If you're serious, heck yeah.
I am breaking it to you live here on the show. I gave you no warning.
Oh my gosh.
So yes,
no warning at all. Yeah, it's kind of like you just trapped me into a date. No, I would be more than happy to.
Our crack production staff will handle all the behind the scenes for you. So all you got to do is beam in with your scintillating self. Okay. Hopefully your technology will function. That will make things a little easier for you, I think. Maybe we'll see if we can get you a fun guest too. Maybe, I don't know. We'll see what we get you for next week. But that might be kind of fun.
Okay. Cool.
As I am traveling hither and yon for the Options Industry Conference, maybe the once and future Dr. Vic stepping into the big chair for the first time. We shall see. And of course, if you want to see more about all of this data we're talking about today, you know where to go. CMEGroup.com/TWIFO is the place to go to learn more, kick the tires, and light the fires. While you're checking stuff out, Bantix.com is the place to go to upgrade to the premium version of those tools, which if you like the movers and shakers and everything else we talk about here, again, we just scratched the surface of those tools. Bantix.com, the place to go to learn more. And last but certainly not least, we talked about Russell 2000 on the show today. There's a lot going on in the world of small caps, and guess what? It seems crazy. Recon is just around the corner. It's in June. We're almost back at that magical, mythical period. You want to learn more about Recon, how it impacts the markets, what's going on, COVID impact, volatility, all sorts of stuff, correlation. FTSERussell.com, FTSERussell.com is the place to go to learn more. Give them a follow while you're at it on the old Twitter, @FTSERussell, all one word. We got to get on out of here for today, listeners, but don't worry. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down the mad maelstrom that is volatility in the equity space on Volatility Views. Back again after that for all of you cool cats in the secret club with Options Oddities. Then we're back again next week, maybe, with Mr. Rhoads in the hot seat for a little bit of the old This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.